Ernie, looking at the report for January, we did see a little bump in the overall index. What are we seeing?
Cindy, our survey of supply managers in the 9 states, stretching from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south, the index rose a bit, but this economy, at least according to the supply managers and in the region, and the national numbers are much the same, this economy is limping along. I know folks that listen to this are saying, wow, you keep saying the same thing. Well, the economy keeps growing at about the same pace, which is almost nothing, zero. The Q4 growth came out, GDP growth numbers came out. The U.S. economy declined by 0.1% in the fourth quarter. So much like the nation, the regional economy, the mid-America economy is just not growing. Manufacturing is actually pulling back. The overall economy in the first quarter and the second quarter of this year, I expect growth to be anemic at best.
Well, looking at some of the numbers, jobs, that's not doing well at all.
Jobs, the index number, now these indices stretch from 0 to 100, 50 being growth neutral. The jobs number was below growth neutral. The manufacturers and the value-added services sectors in the 9 states losing jobs, and that's not good, of course. And you know, Cindy, a lot of it can be tied to exports. New export orders were horrible, very bad, dropping off the table, I'll say. Then, of course, for this part of the country, you've got the drought, and still the lingering impacts of the drought, which of course affects the farm sector, but it affects those businesses that sell to the farm, and there's where we're seeing the negative impacts. And now again, I'm saying negative, but the overall index was above growth neutral, but certainly nothing like what we saw before the recession began, much like what we've been seeing over the last few months. Sort of a seesaw, up, down, all around 50. So again, not good. Not bad though, not a recession. I can't look at those numbers and say recession. Those numbers are still not saying recession, even though the U.S. numbers yesterday said, well, we've got 1 quarter of the recession behind us. Let's see what happens to the first quarter of 2013.
What about wholesale prices? What are managers telling you about that?
Well, Cindy, our inflation gauge of raw materials and supplies, inputs, wholesale prices, rose fairly significantly, and they're up in the 70 range, a bit above 70. It's just telling us that inflationary pressures are rising, but still in a range that the Federal Reserve, can deal with. Now, a lot of this is a result of the Fed. I mean, the Fed has had the pedal to the metal, so to speak, cheap dollar policies, increasing the money supply. Of course, that's pushed agricultural commodity prices up. It's pushed all commodity prices up. We asked the supply managers, how much do you expect the prices of inputs that you purchased this year to grow by in the first 6 months? It was about 3%. So multiply that by 2, 6%. 6% annual growth. That's much like what we got when he asked that same question back in the summer of last year, 2012. So all in all, inflationary pressures are not that big of a problem, but they're becoming more of a problem, and I'm concerned long run about inflationary pressures.
What else about the survey that you saw? I mean, we're starting the year off. What does it bode for the rest of the year?
Well, like I said, the most troubling aspect of the entire survey was the new export orders, moved well below growth neutral. And of course, we're seeing Europe struggling along. We're seeing Asia growth there a little not as strong as it has been. And of course, what that's meant is that just not buying our products, our manufactured goods, and some of our non-manufactured goods. And of course, that's hitting the states that we're surveying, almost all of them. Iowa was a bit stronger. In fact, Iowa numbers a record, I shouldn't say a record, but the regional high for Iowa. So Iowa's a little different, and I'm not sure what accounts for that. Food processing for most of the states in the region, not that good, again, because of high input prices, putting in a pinch on profitability. They're not hiring. Looking at ethanol, corn-based ethanol, not that good because of high corn prices, high input prices, and of course fuel prices coming down. So they're getting squeezed like food processors, and with their input prices growing, And for the ethanol producer, your output prices are coming down, so you're getting the squeeze right in there. And of course, for the food processors, they're getting hit by the input prices growing, output prices not growing that much. So that's what we're seeing in terms of profitability. Imports also a little bit above growth neutral, and what does that mean? It just means the economy, our regional economy is weak, so these companies are just buying less from abroad. In fact, they're buying less from domestically. So that's tracking to our import number, which was not good as well. Well, you know, our confidence number up. That's you're thinking, wow, how is that? And it's above growth neutral. In fact, mid-50s, somewhere thereabouts. And what happened there is we had sort of a semi-settlement of the fiscal cliff, of course, with pushing out the keeping the tax cuts for everybody except those making over $450,000. Then we've got, of course, a problem there with the Social Security taxes going up by 2% for everybody. Now that doesn't seem to affect the confidence. So I think confidence is also being driven up by, I think, a little bit of an overly enthusiastic, I would say overly enthusiastic view of the housing market. I think there's still housing we've come off the bottom, but we're still nowhere near back to 2007 and 2006 levels. That's going to take some time there. So I think people need to take a little bit harder look at housing. It's going to continue to do better, but still not good.